Well, welcome to the Economist Board for our December 2024 Watch Report. I'm John Nelson with M&A, joined by Keith Prather of Armada. How you doing, buddy?
I'm doing fantastic. Good to be back.
Yeah, it's always good to be back. Now we're fresh off of Thanksgiving, so our insights are tryptophan heavy. So I'm sure it's going to be brilliant today.
Yeah.
Um, so
Post-election, all those things.
absolutely, yeah, there's nothing going on in the world that would
Nothing.
influence the
Nothing.
economy.
So
So.
boring.
It's a boring time to be alive.
Yes.
So, well, in this video, we're going to try to provide a little bit of that boring context that we've been telling you that's going on in the world, to put a little bit more narrative to what's going on with the watch. And then we're going to focus this particular video on industrial production for manufacturing. So the whole IPMAN thing. And then for our subscribers, we're going to dive into the subsectors of manufacturing in subsequent videos. We'll hit things like transportation of goods, the construction sector. We're going to do a little bit of a macroeconomic outlook. And then we also like to take a look at advanced retail sales because that's about 70% of overall GDP is that in consumer spending. So we take a look at that. So with that long-winded introduction and hearing about us stuffing ourselves with too much turkey, we're going to jump right into the watch for this month. I'm going to share, and let's see, hopefully this won't jump all over God's green earth when I share it. Look at that. Okay, so believe it or not, Keith, I have no idea where you went on my screen.
No worries. I'm
Well,
still here.
you're still there someplace,
I'm
but
still here. I got you.
all right. So, well, with IPMAN, on the other hand, you can see you are seeing IPMAN, right?
Yeah, we got it.
Okay, so you're seeing the IPMAN screen, and what's going on with it right now is we have this acceleration for the next few months, different from last month when we reported on this. We're seeing a little bit of a tail off after 6 to 8 months in the future. It starts to level off and then maybe tail off a little bit. But as I mentioned to you, Keith, a little bit before we kick this off, this thing might whip. I don't want anybody to pay too much of attention to that trail off until it does it about one more month. And if it does it next month, well, then we might have a real trend that we should be looking at. And then if we want to take a look at the long term, this is a pretty encouraging story. What do you say?
Yeah, I mean, John, a couple of things, and we ought to say this right at the outset that we have a change in administrations. We're post-election now, and we know that coming in, there's already volatility in the market, and volatility in the sense that we've got this tremendous optimism that's really hit. I mean, we see it in home builder sentiment, we see it in executive sentiment surveys, we see it in even consumer sentiment surveys, the farm sector. You just see these really positive shots of optimism. But what's interesting about that, and the reason why these models are so important is because the models are looking at the actual economic fundamentals, right? So we laugh about the hopium, right? We hope things are going to get better. And so we're very optimistic about it, but we're still going to be conservative. I talked to a bunch of transportation executives, 22 of the top CEOs for trucking firms in the United States, and they were telling me that for this next year, they're optimistic, but they're leaving their budgets and their spending stable and flat headed into the beginning of the year. And then they'll take a look at market conditions and then they may bump that spending a little bit later in the year. And I thought it's interesting because that dialogue is kind of fitting a little bit of what the model is showing us right now, right? You get a little bit of this trepidation we're going through at the moment where we're waiting on the transition, waiting to see what the new administration is going to do, tariff risk. There's a lot of different things out there that can happen. But generally, the economic fundamentals and those things that are driving these models are showing this demand curve that looks very strong. And John, you and I were talking off camera, but even if we go back and look at the peak of this curve, sometime in 2025, maybe by the third quarter of next year, you're talking about a peak that's going to rival what we had kind of in 2017 and 2018, which is a pretty
Sure.
phenomenal year. So from a manufacturing perspective, we've got really good high lift on this. It looks like a really good demand environment. The last thing I'll mention is that, we offer this one up free to everybody because industrial production and manufacturing, you might not realize it, but there's statistically some heavy correlations between what happens in this industry and what happens in so many different facets of the economy. Everything from commodity demand to energy demand. You think about labor and hiring, you think about what happens in the supply chain. So much of it is tied back to what happens in this model. So again, it's giving us this positive signal, and we're not going to worry about the back end of the curve, as you said, right? Because it's going to whip a little bit. But we like the optimism at least coming in. So the economic fundamentals in this case are matching what we're getting on sort of the positive, optimistic sentiment side of things.
It was funny as you mentioned about so much being tied to this model. In fact, when we start building other models, we almost always start with this one.
Yeah.
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 Well, either what went into it, or can I use this model to help me predict the future of some other sector? So,
Yeah, and what's interesting is, we had that intuitively, it made sense to us, but until we saw it statistically and
yeah.
we had the statistical proofs, then, I felt a lot better about it. But
Yeah.
yeah,
You always like when you get confirmation.
yeah, right.
That's right.
Exactly. Exactly.
All right. So let's take a look at, we'll look a little bit on the supply chain all the way back at primary metals. And this is the contra signal, if you will.
Yeah.
Now, it's been it's kind of funny is because you're seeing this slope off. We kind of showed a slow, a dive even last month. So we're consistent now. 2 months in a row, we're showing a bit of a tailing off. So I'm not thinking that this is something that's a fly by night, that it's going to whip back the other direction, because it's consistently showing it. But it doesn't, when you look at it this way, it doesn't look so bad. But boy, it really puts it into perspective when you stick here. But the one thing that I will point out, and I was speaking with some folks that deal with the metal casting industry, is, the overall primary metal production has been on a slow, long decline for over 20 years. And so they were very concerned when they saw the primary metals chart, but it is what it is, and it's not doing anything different than what it's been doing the last 20 some odd years.
Yeah, this is a good time to point out too that we check accuracy on these models, right? We continuously are running that accuracy measure, and this one 6 months out was batting about 98% accuracy. So, like you like to talk about a lot, John, the front end of that curve, we've got a lot of confidence in that first 6 months,
Yeah.
and we don't even know. I mean, we could have tested it further out. It may be still at 98% a year out, but the first 6 months we got a lot of confidence. What happens
Yeah.
after that, we'll see. And we
Yeah,
do
and
have,
I was going to just kind of point out so people had a reference, if you don't mind me just drawing for a second, but now actually a little bit this way is 6 months still.
yeah.
So up in this area, like right in here, is that 6 month mark. So after that, it gets a little sketchy, but
Yeah. So yeah, I mean, and I think one of the big things with this is let's talk about it in practice, when we see it on the street, right? You're going to get what looks like a very positive curve. If the first 6 months holds and we don't see a lot of change in that forecast, the primary metals and production side of the economy is going to feel pretty good. Some of this is maybe the recovery from the Boeing strike. Some of it could be hurricane recovery efforts. We've got a lot of government spending out there still. A lot of new construction starts on the non-residential side of the economy. A lot of that driving primary metal demand. But a lot of companies, a lot of CEOs are going to be looking at this as we kind of get into the middle part of 2025. And if this forecast holds, John, it's just, they need to be prepared for this. And I don't want to be one of those guys who's sitting here kind of saying, sky's falling. But for the primary metal sector, this is a pretty negative signal. Now, the Trump administration, we have to talk about it now. The Trump administration could do some things to boost U.S. domestic primary metal production. We already know that tariffs are going to be a big part of the administration's sort of playbook, if you will. And this trend that you talked about, this long-term slope, right? We had one CEO call it the sleigh ride to hell, right?
yeah.
Pardon my French. But stopping that, this is all basically offshoring. That's what's happening here, is it's an offshoring trend. And if something were to reverse that, then of course it would start to boost domestic production. Whether that's better for the general economy or not, that's what would happen. So
Sure. Now, what's interesting, its sister sector is fabricated metals, and it gives the contra signal. What's If you look at last month's report, you kind of had a nice slow slope kind of going up there, gentle slope. This month's got a little bit of a higher peak and a leveling off. They end about the same place that they were going to end, all the way out there at 18 months. But I wouldn't read too much into the increase right now. A lot of volatility in the market. So I would, as far as looking at this forecast, my guess is that it may flatten back out a little bit, looking more like last month's forecast, if anything, but it's telling the same general story. The trend is we're expecting growth here in the next 6 months. And what that looks like long term is actually really pretty encouraging, where this was a long-term decline. For the past few years, we've been holding fairly steady around the index mean.
yeah, and this is one of those industries that feels like historically it's been kind of feast and famine, right? And coming out of the Boeing strike, and you and I talked off camera about the fact that the Boeing, Boeing uses thousands of small job shops to do metal fabrication, and that would have been a major hit to the industry with Boeing out of commission for basically a couple months. But with them coming back online, it's interesting that the model is actually picking some of that up, and I think that's what this optimistic spike is. And we can see it in some other models. So when, if you are a subscriber and you do get to the other models, or go get a trial and go check them out, in the other videos, we'll talk a lot about what we see as strong demand drivers in some of those sectors that the fabricated metal industry really relies on, and growth in those sectors. So this is positive. I think we're picking it up from a couple different areas specifically. I mean, aerospace being one, and we'll talk about the machinery industry, and we'll talk about automotive as two of the other key drivers in some of this industry. So, and then again, we keep saying it, but I think some of the pressure on using tariffs and pressure on foreign countries to kind of fix some of the trade imbalances, I think could help the fabricated industry. And you can see some of that trend from 2016 to about 2019. You can see some of that pickup and some of that growth. And so I would anticipate that we might get some of that again. And it's just fascinating to me that the model's starting to pick some of that up. And
Sure.
again, good time to reiterate, these use what, John, 18 to 22 different economic metrics, and it's all statistically driven. You and I have no influence or opinion over what the model shows. It's just the model
No,
shows.
the way to put it, Keith, is I read the numbers.
Yeah.
You read the papers and try to put it into context.
Right.
So the numbers are what drive the charts, not the papers.
Yeah,
So,
that's fantastic.
So, all right. Well, that concludes our look at IPMAN, as well as both fabricated and primary metals. We hope that was a bit illuminating. I'm sure it's going to be interesting for the next few months as the things that Keith was talking about unfold. So look forward to seeing you guys soon.
Absolutely. All right. Take care, everybody. Bye-bye.
Bye-bye.